Underwriting deals is such a major pain point for people. Most don't want to do it, and the people that are good at it are few and far between. That is why after 6 years of being in the industry and buying over 1,200 apartments, using my best-selling multifamily deal analyzer, I created Real Estate Lab, a full suite acquisition software for multifamily investors. We have built a product that helps investors automate their acquisitions and close more deals, all in a cloud-based platform. You can go to realestatelab.com and sign up today using the promo code TAG2 for 10% off your first 12 months. This is David Tupin. Thanks for listening.
Welcome to The Apartment Gurus, where twice a week, host Tate Siemer brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Siemer and the Apartment Gurus.
Welcome, everybody, back to another episode of the Apartment Gurus podcast. And, one of the things that we do touch on on this podcast, which is obviously about commercial multifamily investing, the apartment part of the Apartment Gurus, is we do talk about some of these kind of sister alternative asset classes, if you will. Mobile home parks, self-storage units, and then there's always, of course, flex industrial, retail, office, some of the other commercial assets. But mobile home parks and particularly self-storage to me is a very close cousin to the residential multifamily space. And really what it provides is an opportunity to own apartments that don't have toilets, don't have tenants, and are basically on an auto pay every month and kind of do their thing. And there's obviously a lot of advantages about that model that are pretty compelling. So I'm super excited to have my friend Steffany Boldrini on the show, and she is a commercial multifamily entrepreneur, and is primarily in self-storage. She owns 3 car washes, however, which I think is a brilliant model, and also some short-term rentals, which I think is if you're going to do other assets, I really like the Airbnb asset class, but that's a whole different game than what we are talking about here. So, but Steffany's originally from Brazil and moved to Silicon Valley 20 years ago. And she's had a successful career in tech sales. And for the past 3 years has decided to focus on commercial real estate investing after receiving inspiration from different sophisticated real estate investors. She's invested in 3 different asset classes since then and has achieved a 36% cash on cash returns. That's awesome. And her goal is to scale the self-storage business to a $1 billion company. Super exciting stuff, Steffany. Thanks so much for being on the show.
Thank you, Tate. We got to dream big or else, right?
Absolutely. Yeah. So, let's kind of start there. You had a really good career, it sounds like, going in Silicon Valley tech sales, which is typically a pretty good position as far as pay and flexibility and otherwise. You said you've received some inspiration from other investors. Talk a little bit about that and who they were and what the inspiration was.
Absolutely. So I was actually dating a real estate investor, a very successful real estate investor at the time, and wanted to invest in startups just by a matter of where I was in the industry that I was in. And very soon it became very clear that real estate is a much safer, better in so many levels form of investment. And I decided to start learning everything that I could possibly learn from him, and took 30 pages of notes. And, we got into a contract for a couple of properties, and then we broke up. And then I'm like, oh no, who's going to be my mentor now? So I had to expand my network after that. Yeah. And here we are.
Yeah. So, who did somebody specific become your mentor after the breakup?
So I decided to go to the Real Estate Guys Summit at sea, and it was a phenomenal event. Met about 200 people. I was working it. I was waking up at 6 a.m., going to sleep until the last person went to sleep, and I think I met almost everybody there. And then from there, you start building the relationship over time. It's not a one and done deal.
Absolutely.
You have to continue reaching out and going for the ones that live near you, meeting them, or if you ever visit some people's cities, meeting them as well, and building the relationship that way.
Yes. Yeah. I want to follow up on that point of your follow-up here in a minute. What would you say, like in that story of your progression, would you say it was that event? Was because what I've found, I think with most people, or a lot of us anyway, that get into this space, it takes leveling up of your mindset, and it takes getting your head around your capacity to do large levels of business and big deals, and the fact that that's possible for you, and raise large sums of money as well. So, was there a specific thing that you point to that kind of leveled up your mental game, or maybe your vision for what you thought was possible and what you wanted to do inside the space?
I always wanted to be my own boss and be completely financially independent. So that was always there. And now is a matter of getting there, which, there are a lot of different things that need to be put in place in order to get there. And also you need to get into partnerships. Mm-hmm. A very successful venture capitalist once said that, when he was building his own companies, he said, I completely understand that I have to give up a big piece of the pie to get incredible employees, incredible executives. But guess what? My pie is going to be a whole lot bigger after they come in. And that always stuck with me with regards to partnerships. Mm-hmm. So it's important to always remember that, everyone says you can go, if you want to go far, go with people. If you want to, do it by yourself.
If you want to go fast,
if
you want to go fast, go alone. If you want to go far, go together. I think is the quote, or something like that.
Thank you.
Yeah, that's a great one. Teamwork makes the dream work, right?
Exactly.
Yeah, it's and this is commercial real estate is a partnership space. It's a relational space, and you need to be playing that game when you're out at events like the one Steffany went to, and I want to talk about that in a minute. And playing that long game, right? Like you're meeting these people and getting to know them as people, and treating them as you would, a friend, basically, or somebody that you're showing around the city for the first time, or just, like you want to be setting the foundation for as much trust and well-being, or what's the word I'm looking for, like just just goodwill. That's the word I'm looking for, between you and that person, because that's what's going to really bond you, and it's going to make you enjoy working together. So I think you need to enjoy that part of this business to be good at it. And that's not to say you have to be an extrovert necessarily, but I think you need to enjoy authentically, meeting people, connecting with people, and building those relationships, and doing what my friend Sterling White would call world-class follow-up, right? Like putting them on your calendar once a month, like how
Yes.
hard is that to do? And so, putting them in your CRM and automating communications to them, and then sending them a closing gift when you do a deal with it, stuff like that, like goes such a long way. And so, like, if you're still in the solopreneur mode of wanting to do business, like, commercial real estate may not be for you. I'm not going to say it's not, but what I found, and it sounds like what Steffany's found as well, is that it's really it really truly is, if you want to go far, go together kind of game.
Exactly. And, there are people also that are more of the introverts, and that's perfectly fine too. For example, my weakness is spreadsheets. I cannot,
Right.
It's just like my eyes just roll when there's too many numbers and too many tabs and all of that. So that's what I need to fill in for, right? So if you are an introvert, just find somebody who is an extrovert to do that for you, and go to these events and meet people and network while you do the other thing that you're good at. So it's perfectly fine not to be that kind of person as well.
Yeah, exactly. And one of my good friends, Camilla Jeffs, who did it, one of the best shows I think that I've ever done. She calls herself the introverted investor. I think it's something like that. Introverted investor. And she raises a lot of capital. A lot of people invest with her, and she's doing a very, very good job. And she's like the closest person I know to kind of doing it somewhat solo. But the thing is, she's partnering on every single deal that she does. So,
right.
And she's just focusing on raising capital for those deals. She's not outsourcing those deals as well, which, to me, there's a beauty in focus, and like having a singular focus and really tunnel visioning on one lane. And she's done that well. So before we get into self-storage, I want to ask you about the event you went to, because I have found, what event was it again?
The Real Estate Guys Summit at Sea.
Okay. And how recently was that?
That was over 3 years ago.
Okay. Well, I have found that those conferences, summits, 3-day events can be absolutely, like, completely game changing for you, your company, your mindset, your connections, your inspirations, like the people that you hear speak. Some of the most important relationships that I have in this business were either started at these events, or when you go to these events and 40 or 50 people, man, that's awesome. That is so awesome. There's nothing more powerful than that. And so, like, what was your experience, Steffany, with, it sounds like that was, you mentioned it early on. So it sounds like that was a pretty impactful event for you.
Yeah, it's exactly what I needed. And I always look at these things in terms of ROI. Some of these are more expensive, but the caliber of people that you're going to meet are higher as well. So it's a no-brainer, in my opinion. And it does take time to build a relationship. Like, I may partner up with one person 3.5 years later, right? So that might be the first partnership now, after we build a really good relationship. One of my favorite people in the planet.
Nice.
So like everybody says about real estate, it's a long game. It's not a a night and day success story.
Yeah, and it's really different from single family in that way, because single family, it's like transactional, right? It's kind of one and done with these relationships, whereas in commercial, it's like we've said, just long game thinking, long game mentality, date before you marry, like all that stuff, right?
Yes. And learn from them, right? I learned from this potential partner that even up until now, this person is highly successful. There are people that are, trying to take advantage of the relationship. So we have to really be careful and learn from other people's mistakes, and really be careful who you partner up with.
Yeah,
I know so many people
totally.
that have had bad partnerships.
Yes. And you want to thoroughly vet whoever it is you're going to partner with. You want to see all the financials on any deals they've done. You want to have referrals. You want to have a really high level of trust and, high level of due diligence on your potential partner. There's no doubt about it. Yeah.
Yeah, exactly.
Yeah. Yeah. Okay. So let's talk storage for a second. So when did you catch the vision for self-storage?
I was literally listening to a podcast, Joe Fairless podcast, and he had a self-storage person.
Yeah.
And at the time, like everybody, we were all thinking something was going to happen to the economy sooner or later. And they said that self-storage is a recession-resistant asset class.
Totally.
And I said, that's what I'm going to be focusing on, because I don't know what will happen to the other asset classes.
Yeah.
And I need to focus on something that is recession resistant. And
Yeah.
that is why I decided to focus on that.
So smart. And, there's this metric called the Sharp scale. Have you heard of this, Steffany?
No.
Okay. So it's Sharp. It's SHARPE. And it measures the volatility of different asset classes.
Okay.
In a downturn, or really, I guess, across time. It measures volatility. And so in commercial real estate, at the very top, you've got retail, office to a certain degree, restaurants, assisted care, those type of assets, right? And those are the most volatile in commercial real estate. And I can't remember the exact order they're in, but and then down at the bottom, in the least volatile, is mobile home parks and commercial multifamily apartments, and then the very bottom is self-storage. So you're literally in the least volatile asset class in commercial real estate, which that should make you feel pretty good at sleep pretty well at night. That you're in something so low. I will say that, residential obviously performs very, very well in the course of history and in the course of downturns. In fact, the last crash, there was about a 7% default rate on single family homes in like 08, 09. And the default rate on multifamily was 0.7%, which is basically what it is all the time. Like there was no real deviation from the norm at all. And that's because, these are cash flowing assets, right? They create revenue and create income, and they rents don't go down in a recession typically. So they sustain, especially if the debt service is good, they sustain very nicely through those downturns. So hopefully that makes the Sharp scale thing makes you feel good. You can use that one when you're out there on other podcasts.
Thank you.
You're welcome. So give us the vision behind self-storage. Like, what is it for you that really lights you up about it?
Yeah. So personally, I decided not to even look at multifamily because I knew it was a bit competitive. And I am honestly not sure where the people that bought at a 3.5 cap rate, in 2020, 2021, when their rates are going to be increased, soon. Yeah. Where are they going to be? Because there is no space for anything. There's no ability to look at potential vacancies at these rates, and things like that, especially a higher interest rate. So I was very curious to see where that was going. And with self-storage, we can raise rents whenever. and people can be gone within a month, depending on the state that you are in, if they don't pay rent. And also, like you were saying earlier, there are no tenants, trash, or toilets.
Oh, I forgot the trash part. I said tenants and toilets. I forgot trash. Yeah. Nice.
So yeah, there are many benefits to it, and not to say that there aren't many other benefits on multifamily. I just decided not to focus on that personally.
Well, honestly, like when I think about it, the benefits of multifamily really are they go across to the benefits of storage units. I mean, benefits of multifamily are your income, right? The revenue that you produce, the cash flow you produce from your rents, and and then you've got the aspect of tax advantages I usually talk about towards the end, but just massive tax advantages with bonus depreciation and whatnot. You've got the growth of the worth of the asset. So you're growing equity. And you are, I'm going through this acronym in my head, IDEAL. Equities, EA is appreciation, kind of what I was just talking about, but you can either force appreciation or if it's a market that's growing, it'll appreciate. And then you can really leverage a pretty small amount of money against a whole lot more money to go out and buy these assets. And there's, this is very doable. So like, that's kind of my little elevator speech on multifamily, but you can say all those things about self-storage.
Right. And I do know that there is housing shortage as well. So there are benefits definitely to learning this asset class. So it's whatever rocks your boat. It's whatever you like doing. That's what I like telling people. The car washes have great returns, but it's a billion moving parts that I decided never to look at a car wash ever again. So if you're interested in great returns, but you don't mind spending the time, car wash is for you. Or if you want to figure out how to manage it properly in a way that you will be doing very little, go for it. It's really what is important to people and how they want to spend their time.
Yeah. So you still have the car washes, right?
Yeah, I'm trying to exit them as soon as humanly possible.
Where are they?
They're in Texas, north of Texas.
Okay, so any car wash investors in Dallas, Fort Worth, is that the area you're talking about?
No, it's north in the Panhandle. North.
Got it. Panhandle of Texas. Get in touch with Steffany and she'll talk with you about becoming a car wash investor. I mean, I wouldn't think when you model those out that you can really leverage like somebody else's time as far as management goes with those. Would you say that's the case?
I think there are companies that are coming out right now that will be the manager, like, the companies that do that for multifamily or self-storage. So I think they're in the process of creating that. I think car wash is, what self-storage was a few years ago. Definitely a lot of potential there if people can figure out how to make it work. So the cap rates are pretty high. Someone was mentioning the obvious, which is you also get a lot of land for that property. Mm-hmm. So there are many interesting factors there. And there are also a lot of mom and pops that are exiting that asset class. They were not adding technology to it. They weren't even accepting credit cards. Mm-hmm. So there are a lot of ways to add value in that asset class today. It can be one that, if people start buying that and if cap rates compress, that's an automatic win, right? If it starts to become a popular asset class. Yeah.
Awesome. Self-storage. So if people are interested in deep diving more into the opportunity with self-storage. Are there books that you'd recommend, or audiobooks or podcasts that you recommend listening to?
Yes, I started by reading a lot of books. Whatever is on Amazon, I read maybe 5 to 10 different books there. And there are a couple of podcasts that are specific to self-storage.
Okay.
And I would search for those and start learning that way. And always hire somebody if you don't have a mentor that is experienced in the self-storage world. Hire a consultant to review the deals and make sure that you're getting all the documentations and make sure that that is a good opportunity. That is 100% a must. That is what I did, and it worked out really well.
Yeah, that's super key. And so we talk about paid mentorship, paid coaching on the show all the time. Guys, there's no better investment that you can make at this point in your career. There just isn't. Like, you have to have, in my opinion, just to be competitive right now, you have to have that edge. And a good coach is going to take you so much farther than you otherwise would have gone yourself in a much shorter period of time. So, Steffany, this has been awesome. I've really enjoyed getting to know you a little bit and talk to you here and find out about your inspiration, your vision. You're going to 100 billion and 100 billion. I mean, that'd be good, right?
Sure. I'll take
I'm
that.
like an Elon Musk world right now. No, you're going to a billion in your self-storage unit portfolio. How soon do you want to get that done?
Oh, let's say the next decade.
Like it. I like it. I'd encourage you to shrink that down to 5 years, but that's just me. So I like the idea of whatever, set a goal for yourself, however much time you think it might take you, and then cut that in half. For whatever that's worth. Goal setting technique.
Thank you.
Awesome. Well, again, thanks for being on the show. If listeners want to reach out to you and find out more about what you're doing and kind of consult with you a little bit, what's the best way for listeners to reach you?
Sure. I'm on all social medias if you search by my name, or my website is MonteCarloREI.com.
Yeah. So MonteCarloREI.com. And then Steffany Boldrini is STEFFANY Did I get that right?
You nailed it. Yes.
Okay, good. Perfect. Awesome. Well, Steffany, thanks again for being our guest today on the Apartment Gurus show. Really appreciate you, and look forward to hearing more about all your success down the line.
Thank you so much for having me, Tate. I really appreciate it.
You're welcome. And listeners, thank you for listening to another episode of the Apartment Gurus podcast. And if you enjoyed this episode, got a lot out of it, we love to hear from you in the way of a rating and review on whatever platform you're listening on. And you can always reach out to me at investwithgreenlight.com. You can book an appointment with me there to consult about your business if you'd like. No strings attached, not selling anything. Just want to help. So with that, thank you, everybody, and we'll see you on the next episode. Take care.
This has been the Apartment Gurus with Tate Siemer. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of the Apartment Gurus.